Hey folks, hopefully everybody's having a great day. Got lots of good content in today's video, so please make sure you stick around. If you're new to this channel, this is 9 to 5 to Freedom. My name's Alex. In this channel, I document my journey on how I'm going to build a portfolio that's going to produce us passive income in order to leave that 9 to 5. Most recently, it's using high yield dividend investments. So let's hop right into this. I got a lot to cover, lots of exciting stuff. And let me just go over some things that's going on in the news. Okay, so this week has been so far pretty green. We really like the comeback that we've seen on the markets. As you can see here, we had a nice uptrend starting from Monday and moving into today on Tuesday. So really nice to see that pullback. Year to date, S&P 500 is only down 1.57%. So that's really nice to see. Some things going on in the news. As you can see, we got some positive responses across all industries. We got the Russell, we got the Dow's up, S&P 500, NASDAQ, and lots of stuff going on. There's been an announcement about Hyundai building a plant in the United States. So we'll see how these tariffs play out. Hopefully it'll be positive for our economy. Okay, so for those folks who are new, and I want to start with this. Okay, so here's a snapshot of my portfolio. This was taken January 8th of this year, 2025. Initially, I invested a little bit over $12,000 into some high yield dividend funds. Some of my highest holdings were in YMAG, YMAX, as you can see here, 25 and 25% respectively. I had some JEPQ, some XTTE positions, and when I had this, I started to build it up. I used about 30% margin, and I've done reviews every week on the performance of this portfolio. So for those folks who are new, check out my channel where I do the weekly reviews of the portfolio. I also talk about the different funds that I have and how I like them and comparisons I'm doing. Some other videos on things that interest me as well. So you make sure you check all that out. Well, what happened since last week is I've sold one of my rentals, and on Monday my funds have finally cleared, and I threw everything in right before we had this rally. It was pretty good timing that happened, and this is my portfolio as of today. Okay, so this is all of the funds that I currently own. As you can see, the dollar value, percentage, position, and wanted to go over this and tell you what my plan is going forward with these funds and how I'm going to build this portfolio that's going to allow me to have some extra income. So this is really exciting stuff, folks. I've been waiting. I experimented for 3 months with a small portfolio. I was looking to see if this is viable, and I felt pretty confident. I've watched how some of these funds have performed over time, and I decided to really go deep into it and test this out for the remainder of the year with a much larger account. So what I was doing is I was really building different portfolio targets. And I know there's a lot of stuff here. I don't want to bore you with spreadsheets, but basically I was looking for different blends between the high yield funds and some funds that's been around the block that don't pay as much but are much stable and don't have much NAV erosion. I tried different target amounts for dollar wise, and I've landed somewhere in the range of $5,000 per month portfolio. And this is just, I just did an extract out of my Fidelity account. As you can see here, I have many different types of funds, and I'll go through them. But in total, I have $186,000 of my money invested in this. Right now, I have about a $5,000 margin position. And the reason for that is I got a little bit overly excited when I was putting these orders in. I wasn't paying attention too closely to the prices of these stocks. So from what I've built originally, I kind of went a little bit over, but that's not a big concern there. So let me just go through the funds and give you an idea what I'm trying to do here. So this is all sorted. These are all the funds that I have. This is the number of shares. This is the price. This is the amount that it represents of the portfolio. Here's the percentage wise. And this is the distribution yield. Okay. And this is the estimated income. Now, a couple of discrepancies here for these two yellow items. I just make a note here so you, in case there's questions. For some reason, Fidelity thinks that XPay pays 9%. I'm not sure why. It's showing, if you go under dividend view, XPay shows at 9% and XPay targets 21%. So I'm not sure why it's pulling that. And the other one was BTCI. It's shown that it's yielding 12.8. Well, if you actually go to the website, it's a much larger dividend there, which is at 33%. So if I make those corrections and we have the estimated income, as you can see here, and let me just scroll up because my face is in the way, $61,000 is the target for this portfolio. Now, let me go through some of these funds. I'll try to make it real quick and just go over my decision, why I decided to go through it. If I zoom in here a little bit. Okay, so XDTE, this is my largest position. This is 26% of the account. I've been tracking XDTE. I've been tracking XPay, QDTE. I really like those Roundhill ones. And when I was tracking them, as you can see from this really mad spreadsheet that I have, I looked at how much erosion we're seeing. And XDT pays about 27%. And a 1 year erosion, we saw 12% erosion there. All time at 11%. When you factor in erosion and current dividend, I was looking at what delta we are paying out. And I saw that the delta was actually higher than an XPay. Both of the funds are very similar because they're tracking the S&P 500. So I decided to make XDT as my core position, and I invested 26% of the money into it. And that position is expected to pay me $13,500 per year. Next position, I had XPay. And my goal here was for the next funds, XPay targets 21%. It's slightly, I feel like, less risk. It might see a little bit less erosion. So I made that my position of 10%. And then we have these funds here, QQQI. This is 10% position. This has a yield of 13%. JEPQ. This fund's been around for a while. I have a position 10% there. SPY-I, another good one at 10% yield. I have a 10% position here. As you can see here, if I sum all these up, my core position is sitting at 66%. And you can't see it because my face is in the way. But about 67% of my account is in these funds. Now, I would say the safer funds would be the QQQI, JPQ, SPY-I. and these make up the 30% position. If we go back to this crazy sheet that I have here, and actually I can show you right here. My target originally was 50% to have a safe, and what I consider safe is lower yield but less erosion. And I was looking for something with actually appreciation that would keep my portfolio afloat. But I decided that XPay would be a pretty good candidate, and that would get me to the 40% mark. And there were some other funds that I was already holding that would make up the rest of the difference. So we'll get to that later. Okay, so next we're moving into BTCI. This is a play on Bitcoin. I've tracked this from Neos. As you can see, its performance, BTCI right here, we have a 33% dividend and a 1-year performance of 5%, all-time performance of 2.67%. So I really like that, and we've seen Bitcoin going up over time. So I personally feel that I'm going to be bullish on this, and that's why I threw in 8% of my account into this. So $15,000 was invested, and this is going to pay me out. Let me just hide this stuff because you're unable to see these dollar amounts. Okay, here we go. That's better. Okay, so this is my estimated income, right? So this BTCI, that's going to pay me $5,000. So really good yield there. Moving down here, QDT. I wanted to have a position in QDT, not a large one, a 5%, 5.5% position. This has a higher yield, but we do see more erosion with it. And I wanted to balance out to have a little bit more money up front, and hopefully the other funds will carry the balance of the erosion. Really, I was looking to build a portfolio that would give me the maximum amount of dividends while maintaining NAV overall as a portfolio. And I've done historical charts on all of these funds. And like I said, I was looking at different scenarios, different blends, and to see what the percentage likelihood of a portfolio maintaining its NAV over time. So that's why I was running through all these different simulations. So I wanted to have a position in QDT. This tracks the NASDAQ 100. Okay, next we're getting into the risky plays. Okay, I'm just going to highlight these so you guys can see, and I'll make them orange. These are the ones that pay the most amount of dividends, but they have obviously the highest chance of erosion. So I don't want to have a too large of a position, but I really wanted to have some of that juicy yield up front. My largest position here, as you can see, is in MSTY. Again, you might say that it's a little bit repetitive with BTCI, but I think this is a buying opportunity. If we look at MSTY stock, this is what I was looking at. We have, and I've talked about this before, but I'm looking at as we have a couple of momentums here. We started out this fund at $21. We doubled it. It went down to 19. Then it almost doubled again. And then we're back down to the lows. And if you plot this against Bitcoin, you can kind of see where some of those patterns are. But I felt like this was a buying opportunity. And I think we might see another bullish run, another wave that we've seen in the past. So that was my thought process. So I thought this was on a discount. Again, this is not financial advice. This is just what I'm doing. Next position is in Platy, PLTY. I have a 3.7% position there. And this one, looking at it, I think my spreadsheet is actually calculating the wrong distribution yield. If we go to yield max, current distribution yield is 100 and almost 12%. So let me make that adjustment on my spreadsheet, We'll just do it as that, which is going to bump up our total. But the reason for PLTY, again, I don't want to have large positions in these because, you know, these are very volatile. Okay. But one thing with PLTY is this tracks Palantir. I kind of like the trend. Okay. So we started at $52. This fund hasn't been around too long. And we had an all-time high of $91. We dropped back to 60. We're floating around 70 bucks right now. I look at this trend is upwards and sideways, which I really liked, and I thought this might be another opportunity before another bull run. But I think this was almost like an odd situation here. Now, if we look at PLTR, I think we can kind of see why that happened. Okay, and I think that happened right on the spike here. If we remove that spike, we still see that trend upward. So I think this is, in my opinion, and the reason I'm doing it, I think this might be a buy-in opportunity again. And again, not a huge position in here through 7,000 bucks, but I wanted to get some of that momentum there. Okay, then we have SMCY. And let me just show you why I'm playing this one as well. Okay, so I think, you know, this started out at 50 bucks. And it's been kind of flat. Okay, it's been flat for a while, since November. And it's paying good dividend. So even though it's flat, it's paying pretty good dividend. Can it go down? Sure. Can it go up? Sure. But I threw in 2.8% position, 5,000 bucks. It's going to yield 64%. Let me just double check that. Let's see what this says. SMCY right here. Dividend. Oh, it's actually 105% distribution rate. So if we update this is going to bring up our total as well. So if we do this times this, 5.5 thousand. Wow, amazing. Okay, next one is NVIDIA. Now this one I think is one of the most risky ones in my opinion. I feel like a lot of juice has been squeezed out of NVIDIA already. And this is kind of a dying dog. But the reason I bought it is because it's at its all-time low. Now, as you can see, it's been a little bit rocky. Okay, but for the most part, it never dipped below $20. I mean, we had a small comeback here back to its original price, another one here. And I feel like this might be a buying opportunity, or this might continue to trend down. It all depends. There's been a lot of movement with NVIDIA, but so I thought this was the riskiest one. I put in 2.8% in there just for the heck of it, see what happens. Okay. Next one here is AIPI, and this one tracks the AI stocks. And this is from Rex Funds. Again, this is a sideways mover. It's a sideways mover, and it pays great yield. I thought about it. I think this might be a buying opportunity, just seeing that small dip that we had there. So, the current dividend, let me just double check, make sure Fidelity is correct from Rex shares. 34.8%. What do we have here? Ooh, 26. Now again, these fluctuate a lot, so you know these might go up and down, but Anyways, okay, so then these are some of the old positions I held from my original investment. I'm not going to sell them. I'm not going to invest more in them. They pay out their dividends so far, and we'll see if they will continue to or not. CLM CRF, this is from Cornerstone. Again, this is from my old investment. Not selling them. Between the two, I have about 3,800 bucks. And then all the other onesie twosies that make up less than 1%, these are all left over from my original portfolio. Okay, so not to make this too long, folks, wanted to give you this. Now this looks amazing, $70,000. Again, if the way I look at it, if we have a 10% erosion, let's say we have a good year, we have a 10% erosion, that's going to lose about $7,000 off of this. And this portfolio might be down, let's say at a 10% erosion, so it'll be down like 20 grand. So we might be down to like 170 or something like that. So we'll see if that happens or not. But what I'm doing here, and this is just for all the viewers, again, I'm looking to build something that's going to carry me, and I think these funds here, this is going to be the bread and butter that's going to carry me. This is the middle. Then we're going to have those funds that are going to balance out and give us a little bit more juicy yields. I think that's going to be from Roundhill. I'll mark those orange. And then we're going to have ones that are more risky, and we'll make them red. And these are the ones that are going to give us the largest yield, but be the riskiest of them all. So if you look at my riskiest position, they make up about 16%. And most of this other stuff, I feel like it's generally safe. So that's the plan. Again, you know, this is all hypothetical. We're going to track it. I'm looking to take this money and pay down some debt that I have and to do some projects here that I have around the house. I'm not going to drip anything. I'm not going to reinvest any of these dividends. We're going to do weekly reports on what happens to the balance of this portfolio, as we have been doing on every Friday. And we're going to track all the dividends that are getting paid out. There's a lot of different content creators on YouTube that have, I feel like, that are filled with hopium. They think they can retire on Misty and NVIDIA and all these other yield max funds, not understanding that they could be completely wiped clean overnight. And some of them are quitting their jobs. I think that's not really wise. I think it's okay to have a small portion of your portfolio to take some of those dividend yields, but these funds have been around for long, and we've seen how much they get hit with a small downturn that we've seen in the past couple of months. So I think, again, this is not financial advice. This is just what I'm doing, and I'm just showing to everybody who's interested on what my approach is to all this. So if you like this kind of stuff, make sure you give me a thumbs up, subscribe, and we'll see you on the next one, folks.